Imagine a world in which automobiles are considered artistic marvels rather than merely mechanical devices, where electric power whispers over the streets and AI driven innovation is the norm. Tesla is creating this kind of world. Although the corporation is currently leading the electric car market, its goals are much more expansive. Tesla is working on solar power systems, brain computer interfacing, and potentially self driving automobiles. This video will examine Tesla's untapped potential, highlight the company's innovative technologies, and go over its future goals. We will also address the following query: is Tesla only now beginning to realize its enormous potential? So fasten your seatbelts and come along for a ride into the future of transportation. Please remember to use the like and subscribe buttons first. Let's get this video going, and welcome to Tesla Stock News. As you are all aware, Tesla is much more than just an automobile company, despite what the media frequently claims. Tesla is not your typical automaker. Rather, they are the innovators. Imagine that they are not only putting together cars, but they are also performing a creative symphony, arranging more than 80% of their parts internally. They are the innovators and conductors of quality at every note, from the raw ingredients to the final assembly line. The irony is that they are more than just travelers on the supplier train. Nope, they've moved into the mines and are actively extracting lithium, which is essential to their batteries. Their energy fantasies gain a spark of independence from this self-sufficiency, which also lessens their dependency on outside sources. How are batteries designed? Verify, producing, check again. Not only does Tesla design batteries, but they actually manufacture them. This degree of control puts them in a class by itself in the world of electric vehicles, not merely stopping the buck. Consider range, energy density, and Tesla setting the standard. Let's enter the autonomous lane now. Tesla is plunging headfirst into the AI pool, not merely towing the water. They are the forerunners in robotics and the designers of fully autonomous vehicles. They envision a time when automobiles would drive and people will be relegated to the sidelines. Settle in for a surprise. Tesla is more than simply a vehicle and tech company. They are also masters of chips. They have created the powerful D1 AI microprocessor, which powers their cars and autonomous systems. It's a thinking, learning machine, not just an automobile. All right, folks, let's go outside the garage. Tesla is flying through the solar skies, not just on four wheels. They are painting the planet a sustainable shade of green by installing solar systems for residences and commercial buildings. Let's now discuss energy storage. Tesla gathers energy rather than merely using it. They jokingly sell the extra energy they store back to the grid. It's similar to turning solar energy into cash and turning renewables into a profitable endeavor. And levying. With charging stations spanning the world, Tesla has you covered. They have somewhere to put your digital fantasies to rest, no matter where you travel. Anxiety about range? Not close to Tesla's home. But there's still more. Not only is Tesla a master of hardware, but they also masters of software. They are letting the world in on their autonomous secrets, licensing their whole self-driving software, and opening the gates. Protection. Tesla is creating coverage that is just as distinctive as their cars. It's a shield made specifically for Tesla, not just protection. Feeling a little confused? Tesla is also living in the clouds. They are venturing into the digital void by investigating cloud storage services. Not to be overlooked is Tesla's computing powerhouse, the fifth most powerful supercomputer in the world and a center of digital magic for AI training and mastery over challenging simulations. And greet the Tesla bot, of course. Their extensive knowledge of robotics goes well beyond the road, suggesting a time when Tesla's technology will be multifaceted. In the world of electric vehicles, Tesla is the heavyweight champion, not the underdog. Their array of tech-driven products demonstrates their unquestionable leadership. The Tesla Model Y became the world's most popular car in 2023, regardless of whether it was powered entirely by electricity, petrol, or hybrid juice. However, Tesla's narrative is just getting started, so hang on to those charging wires. Get ready for a 5-year ride of technical wonders that will change the automotive and energy industries. Tesla's portfolio is not a one-trick pony. Rather, it is a work of art, a symphony of change, and a blueprint for a time when autonomous vehicles, renewable energy, and limitless invention are the norm. Tesla Incorporated is the subject of a close examination by Barron Partners Fund, which released its Q2 2023 investor letter recently. In its most recent investor letter, Barron Funds, an investment management firm, revealed some juicy details. Let's now discuss the performance of their fund, the true showstopper. They seem to be dancing to a different beat, as seen by their astounding 15.54% return in the second quarter of 2023, which much above their targets. In comparison, the S&P 500 index managed 8.74% and the Russell Midcap Growth Index managed just 6.23% and 8.74%, respectively, over the same period. But there's still more. This fund has demonstrated remarkable returns year to date, with an astounding 42.59% increase. It is not merely a one-hit wonder. The indexes are lagging behind at 15.94% and 16.89%, respectively, in the interim. Look at their top 5 holdings to see their stellar picks for 2023 if you're wondering how they're managing their money so magically. Let's now focus on Tesla Incorporated, the main attraction of the exhibition. This tech giant isn't your typical automaker. It has its headquarters in the sun-drenched metropolis of Austin, Texas. With a focus on designing, developing, producing, and marketing entirely electric vehicles, they are all about the future. That's not all, though. Additionally, they are dabbling in energy production and storage technology. Tesla Incorporated was trading flat at $245.01 per share as of September 1, 2023. But with a 2.56% return over the last month, Tesla Incorporated performed something of a moonwalk. Its shares had a little decline during the previous year, shedding 9.33% of their value. But don't let these anomalies on the radar fool you. With a staggering market valuation of $777.659 billion, Tesla Incorporated is still a major player in the industry. Many reasons contributed to their most significant disruptive growth position's strong performance. Investor sentiment is significantly turning around for Tesla Incorporated at the moment. The issues that beset Tesla in 2022 are now in the past, and the business's finances are still in good shape. Even though their margins have somewhat decreased from their peak performance, the behemoth in electric vehicles is looking optimistic in light of recent developments. Tesla's successful entry into the Chinese market, where deliveries are impressively rebounding, is one of the noteworthy developments. Additionally, production has increased at Tesla's most recent manufacturing site in Texas, and this growth is anticipated to have a good effect on domestic sales and profit margins. Along with these developments, American government measures have helped to lower the cost of Tesla automobiles for the general public and to offset the company's expenses related to battery production. Experts and market analysts are beginning to think that Tesla has only just begun to realize its full potential. Among these changes, Tesla's strategic alliances with rival companies throughout the quarter are noteworthy. Early in June, Tesla accomplished a significant milestone by agreeing to provide Ford Motors with access to its state-of-the-art network and electric vehicle charging technologies. Other conventional automakers and producers of all EV vehicles, like as General Motors, Rivian, and Volvo, quickly followed suit. It is anticipated that this trend of cooperation will continue, demonstrating yet again how excellent Tesla's infrastructure and charging technology are compared to other industry standards. Consolidation around a single technology has the potential to hasten the installation of EV charging infrastructure, allay worries about obsolescence, and ease reluctance among potential EV purchasers. With an astounding 60% market dominance in the domestic EV industry, Tesla is the clear leader in the rapidly increasing global adoption of electric vehicles. This highlights Tesla's importance in the industry and places it as the main benefactor of the ongoing shift towards EVs. Beyond electric vehicles, there is increasing interest in businesses that can use artificial intelligence in the investing environment. At first, the focus was on semiconductor and software businesses that make AI possible. Investors, however, quickly saw that businesses which could effectively use AI might be able to gain even more advantages. Tesla has led the way in this area, releasing its hardware for autonomous driving in 2016 and continuing to develop its software. Tesla's autonomous driving technology is largely based on artificial intelligence, AI, with its vehicles being able to sense their environment and make judgments instantly, a classic AI application. By successfully fusing cutting-edge computer hardware with inferential software and proprietary AI training, Tesla has established itself as an industry leader. It is anticipated that Tesla will eventually promote Tesla Inside, its self-driving service, to other automakers. Although Tesla has clearly performed exceptionally well, there was also notable growth in a core growth firm and another top 10 position throughout the quarter, both of which outperformed Tesla in terms of appreciation. One of the best performers over the last 3 months is Costar Group Incorporated, which increased by an astounding 29.3%. Costar's deliberate entry into the home data industry, where outcomes have beyond projections, is responsible for this upsurge. Costar's monthly residential user base has surprisingly exceeded internal forecasts, and this accomplishment was made prior to the company increasing its marketing efforts. As of right now, it is clear that the residential opportunity is far more significant than first thought and can be explored for less money. Despite its impressiveness, this diversification plan has not been without its difficulties. There was some downturn in Costar's legacy commercial sector, mostly as a result of macroeconomic issues. However, the company now has more stability and value because of its flexibility to expand the range of products it offers and even take the lead in a neighboring market sector. In a market environment where a small number of firms and sectors have been driving performance, protecting against large portfolio drops has been critical. Remarkably, a large portion of the portfolio's underperforming assets were centered in the real irreplaceable asset and financial sector closely associated with overall economic conditions. Although the returns on all of these categories lagged behind the bigger index, only MSCI Incorporated saw a decline of more than 15% among the fund's biggest holdings. Like Costar, MSCI is actively working to broaden its range of business offerings. It continues to be the leading player in the index business, which is its strength. Despite having strong retention rates, this division is nonetheless vulnerable to cyclical changes in the economy. Recent fears about regional banking have resulted in longer sales cycles, cautious client spending, and a minor decline in retention, especially for smaller clients. There has also been some slowing down of growth in more recent business lines. Nonetheless, the general consensus is that difficulties in the more recent categories as well as the legacy items will pass quickly. The industry standard for evaluating performance, risk, and ESG is now MSCI's products. Even if the banking crisis temporarily restrained customer spending, more industry regulation is anticipated to induce a major shift in product lines, particularly the transfer of private assets from traditional banks to third-party asset managers. With its wide data resources and network of clients, MSCI is well positioned in this market to support these managers' services. One thing that will provide MSCI a competitive advantage is the difficult task of being able to access private corporate data. As was shown in the first quarter, the fund raised its investments in particular financial firms in response to stock price declines caused by macroeconomic worries. During the quarter, notable additions included growing holdings in MSCI and Charles Schwab Corp. Moreover, Tesla Incorporated is ranked 28th out of the 30 equities that hedge funds most frequently own. At the end of the second quarter, 79 hedge fund portfolios held Tesla Incorporated, a co